Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom. G'day guys, this is Jackson Milan, the Wealth Mentor, and we're here for another episode of the Financial Freedom Secrets Show. And this is a topic that we haven't covered on the show before, but I'm very curious to unpack this area around understanding how to trade the share market. Now, I've got a special guest here, Louise Bedford from the Trading Game, who she's going to share her story and how she got to where she is and her overall system. But it's around how do we actually trade the share market. And whenever we enter this area, I'm always a little bit apprehensive, because I personally don't actively trade the share market. I've got a very passive strategy because as a busy business owner, now I realize that I don't want to gamble on the stock market and try and speculate on what I think the market is going to do. And I don't have a system. So I wanted to get it straight from the expert's mouth, to be able to share with you how a profitable and systematic share trading system could work, to give you hopefully some tools to add to your kit bag and hopefully help you buffer against the risks of trading when you are speculating and throwing darts at a dartboard. So Louise, thanks for joining us. How you doing?
Hey, good, Jackson. I got to say, though, there's a couple of things in your intro that I've got to question you on. I think it is quite interesting how some people consider investing in the stock market gambling, whereas if they put their money with a super fund hedge manager, that seems safe. Actually, the gamble is if you're not checking up on your funds and you're not being diligent with how to use those really hard earned through sweat equity dollars. So yeah, I would say that word may not be as well placed as perhaps you came across thinking initially.
Well, let's unpack it. I'm looking forward to having a debate if we need to, and making sure that everyone leaves with some clarity. So looking forward to going deep on it. So let's start right at the beginning, Louise. Give us a bit of your origin story. How did you get into this space, and essentially what got you to doing what you do?
Yeah, well, look, I started out, it was such a long time ago, Jackson. It is just amazing how long ago it was. 1990, way back when, I went to a business function that said, and it really impacted me, you can really become a millionaire through either shares, property, or business. And most people tend to combine when they get to a certain level. And I didn't have the money to be able to buy property back then. And I didn't really want to run my own business as being my primary way of earning. So I thought, wow, I can probably trade shares alongside a job. And thank goodness I did, because after 5 years, I was able to leave my job. Actually, that's code for they kicked me out of my job because I could no longer work. And I traded after that. So I lost the use of my arms for about 2 or 3 years. And when you're a national sales manager, they don't really want to unless you're able-bodied and can travel and can do all of the things that you need to do without a carer. So that was my auspicious beginning. Yes.
Wow, what a journey. And I guess that skill set, I guess, saved you. I guess. Have you ever thought about the idea of what you would have done if you didn't have that skill set of being able to trade the share market?
I know, I know. Sometimes I wake up in a cold sweat at 3 o'clock in the morning and going, oh my gosh. Sometimes the things that we think are going to really cripple us are the things that we can use as a springboard to move into a completely different direction in our lives. So since then, it has not all been smooth sailing. I have had a variety of other health issues. And look, the thing is, I really am so grateful that I can earn my money out of trading. And I do have my own business alongside and some property as well. So I think that early seminar did get me set up to incorporate all three into my life.
Yes, makes sense. And look, that very much aligns with our ethos. all of our listeners are business owners, and we believe that business is the kind of the cornerstone of wealth creation. If you can have your own business, you've got the ability to create active income and hopefully build a saleable asset that you then need to convert into property and shares. And look, business is risky. We can't have all of our eggs in that one basket. And there are a lot of business owners who continue to reinvest in their business without taking that money off the table and investing in property and shares. But given that our clients are busy business owners, and look, I guess a lot of my philosophy has been that there's that you're either active or you're passive income when it comes to your wealth creation. And you hit the nail on the head. There's plenty of active managers out there who profess to outperform the market. And you've only got to look at the Spiver report to see that 80% of those professional managers underperform the index. So my personal investment strategy is an index-based approach because I'd prefer to be passive and pay low fees than to be underperforming and having to overpay. But let's unpack some of the kind of mistakes and things that people, particularly busy business owners, might make when it comes to trading the share market. What are those common mistakes that you see that people that come to you having made in the past before they implement your system, Louise?
Well, one of the things that you've already touched on here is fantastic because you're talking about index trading, which is spreading your risk. It's another form of diversification. And it does mean that we don't have to be sitting in front of our computer for 8 hours a day. I love that. I would still consider you a trader as long as you're taking an interest in what your money is doing and that you're prepared to get out of a position if it's not working for you.
Yeah.
So the first thing that I think people do wrong is they think this is going to be easy, that it's going to be a snap, and how hard can it be? And surely everything's a game stop and goes to the moon. So underestimating the role of risk, not understanding that they have to educate themselves before they get involved, and not being prepared to take evasive action if things aren't going in the right direction. I often think with everything that you do, Jackson, you are a mentor, you're a coach, you're an unreasonable friend to so many people. That's the type of thing that you need in the stock market as well. You can't just go barreling on expecting things to be fine without somebody to help you, to guide you, to give you a little bit of a course correction when you need it now and again.
And it's interesting, right? Like even I trained to be a financial advisor. I've got a master's in finance. And even going through all of that, there is so little that you actually learn about trading the market, right? It's such a superficial education that the vast majority of people know nothing really when it comes to the stock market. So when it comes to getting educated about being able to objectively pick investments that are going to allow you to maximize your likelihood of producing a great return. What are some of the fundamentals, Louise, that go into that?
It's interesting you use that word, fundamentals, because that is one way to approach things. So that's things like profit and loss statements, PE ratios, all of the aspects to do with the business that an accountant would usually have a look at.
Mm.
So that is one way to progress. But the other way, and you can combine them, is to use technical analysis. So technical analysis is looking to see, are people putting their money where their mouth is? What does public perception do here? Are people actually investing? So I look at price and volume on a share chart. And if the share chart is going up, then I'll buy it. If it's going down, then I'll sell it. And I keep my position sizes small. So even if you have never seen a share chart before, and this is completely new as a field, have a look to see what are the shares your superannuation fund manager has invested you in. And if they're not going up, that fund manager is doing you a disservice. So look to see data, be data driven, be fact oriented, and take an interest in what can make the biggest difference to your retirement and your future wealth and health.
So what I'm picking up here is that we're not necessarily trading the fundamentals associated with the company of how it's performing. We're trading the psychology of other investors and their perception and sentiment of what's happening in the market. Is that right?
Yes, yes. And the easiest way to see that psychology is to have it on a share chart. So I always think there's two types of psychology in the market. There's what goes on between your own ears. That's, of course, vitally important and something that you always aim to influence people to expand their view, to be a growth mindset type of person. And there's also the psychology of the other market participants. And the only way to measure that is to see, are there buyers? Are there sellers? What color are the candles? If they're green, it's growing. If they're red, it's bleeding. Some funds are bleeding out of that share chart. So just look to see the share chart, see what direction it's going in, and then you can add some other bells and whistles like different indicators. But first and foremost, if you stand back from that share chart across a room and you kind of squint your eyes, is it going up, down, or sideways? And if the answer is down, you are doing yourself a disservice by staying in that share.
Okay. So when it comes to implementing a strategy and I guess teaching people to create this strategy based on these indicators and what's going on, um, give us some of the nuts and bolts of the kind of the process holistically, because I guess it's not just as easy as kind of saying if it's going down, we sell, and if it's going up, we don't. How deep does that go?
You definitely need to refine it, but it's always good to start with those first principles. So, the very first principle is trading plan design. So, you need a written trading plan that covers how you're going to get in, how you're going to get out, and how much money to place into each position. And it's more than that as well. It's a business plan. It says, what are you going to do when you go on holidays? Who's going to look after your positions then? And what happens if you get sick? How will you look after your portfolio in that circumstance? So, a trading plan is the core of everything I suggest that people implement. And you can pick up my trading plan template from my website, tradinggame.com.au. So, tradinggame.com.au, you can download it for free. That's how serious I am about making sure people understand the trading plan is the key. Now, in terms of some of the things that you can do for your portfolio right now, let's have a look. One of the things that you can look at is how far from the all over high has that dropped. So if it has hit a high of $15 and it is currently $2.50, how do you feel about that? Where would you have preferred to get out? And can you use that type of philosophy to guide your future trading decisions? So start by looking at where you're at. What are the shares that you own? Work out, where are you deciding that that is too much pain? I don't want to be in that share anymore. It's dropped by this amount, so I'm going to exit. And there are some things that you can add to that, like average true range for those of us that play around with where to place a stop loss. You can look at the average way that that share moves. And if it goes, say, 3 times the average true range, the ATR, if it drops by 3 ATR, then you can exit. So 3 or 5, they are generally really good stop loss points to put your exit strategy at.
Makes sense. Cool. And look, I think the planning part is so important. I think there's so many people who dive into things feet first. They don't have a plan. They don't have a reference point. They don't have a kind of an objective rule book that helps kind of influence and guide their decisions. And what happens is they get emotional, right? And I think that's the common feedback I hear with people who've been involved in the share market, or a family member's been involved and they've lost a lot of money. And frankly, there's been very few instances where people have been completely wiped out because of the share market itself, that an investment has lost its entire intrinsic value. The vast majority of the time, as the market has fallen and that individual has crystallized their loss through selling when the market has been at a low. And that's probably 8 or 9 times out of 10 what usually happens. So having that plan makes so much sense. So I understand the philosophy, but there's also a big trading universe out there, right? There's indexes that we could be trading. There's individual companies we could be trading. How do we refine that universe to be able to choose what types of investments that we should be looking at? Do we listen to Uncle Bill at the family barbecue on a Sunday, and or is there a better way?
Yeah. Look, Uncle Bill, if he has got a track record that says, yes, he knows what he's doing, listen to Uncle Bill, but otherwise, really be skeptical. There is a lot of hearsay and rumor out there
Mm.
about how to trade well, and it'll be up to you to discern the facts. So, some of the things that you can do to really look after yourself financially is read some good books. So, books like Trading Secrets and Charting Secrets, and even my new little baby, Investing Psychology Secrets. Jackson, I'm so
Fantastic.
excited. Yes, how nice. So, this is the very, very first copy. So that will be available very shortly. So those types of things can really help you in terms of your subconscious processing about how do I go about this as a business? Because this is the quintessential small business. Everything I do for my other businesses, I do in the share market and in the stock market as well. So
Mhm.
looking at universe is important. So where do you actually place your money? So let's get back to where your question was very intuitively arriving to. This is one of the biggest steps that a trader can take. Is the Australian market representative of the entire world? I'm going to say a big fat no on that one. So there are things that we can do. There's an indicator called relative strength comparison. You can compare like the Australian market with the US market, for example. So for those of us that are more familiar with the terms, you might compare the all odds to the NASDAQ. And you
Mm.
might say, okay, so the NASDAQ currently is outperforming the all odds. So even if I want to take a bit of a back seat and not manage things too closely, I could get an ETF, an exchange traded fund that has a NASDAQ exposure because that is currently outperforming the all odds. The S&P is also the S&P 500, the top 500 US stocks. That is also outperforming our top 200 stocks. So maybe an ETF with that type of exposure could be useful as well. So you can take definite steps to compare what is performing the best, back it with your money, and make sure that you spread your risks by keeping your position sizes small. Don't put it all on black. That is not the strategy here at all. The strategy is to be that effective business owner that you already are. Make sure you're a good steward with your money and make sure every dollar is panting as hard as it can by the end of the year. So it's not just relying on your sweat equity, it's relying on the markets also helping your returns.
Makes sense. And is there a general rule of thumb in terms of diversification? Like, is there typically a general rule of how many stocks or indices that you should have in a portfolio to minimize that concentration risk?
Yeah, there really is. And it's based on something called the Kelly equation. The maths behind it, it's designed that if you have a sudden drop in the share market, let's call it a crash because everybody's scared about a crash, even though they're
Yes.
not all that common. But that is the thing that strikes fear into people's hearts. If you have a crash, then how can you protect yourself?
Mm.
Now, the Kelly principle says that we don't put more than 25% of our money into one position.
Mhm.
Now, if you are covered, I'm going to use a little bit of jargon here, but if you're covered in a CFD, a contracts for difference, with a GSLO, which is a guaranteed stop loss order, they guarantee to take you out at a particular level. So you don't have to worry about that 25% because you are guaranteed to exit at that particular level. But in general terms, people aren't, when they're beginning, using CFDs.
No.
They are using something that is probably much more like the top 20 in Australia. So, with those ones, if you're just investing through like a CommSec account or a self wealth account, something attached to your bank, then don't have more than 25% as a maximum in any one position.
Makes sense. Yeah, I think that's great advice. And because I think so many people have this concentration, they back the winning horse, they have high conviction, but that ultimately can be their undoing. And we don't want to have all of our eggs in one basket. Now,
That's
I guess the
right.
next part is that business owners obviously get to that point whereby they don't have necessarily a lot of disposable income. And we see a lot of business owners defer their wealth building decision making because they're like, look, I know I need to amass X amount of money in wealth to be financially free. I've only got this much extra surplus. I'm so far away from what I need to do. I'm just going to defer it and do it once I have achieved XYZ financial goal. So it's always about defining, well, how much do you actually need to get started? So, is there a general rule of the least amount of money that people need to have available to commit to a strategy like you teach?
Yes, it's always a little bit of a how long is a piece of string.
Of course.
It's I would suggest if you are cash strapped, that you still do need to save in order to do this well. So you could get involved like with one or two ETFs or indexes, and you could have five to $10,000. Okay, that would be on the lower side. But if you want to be an active trader, you really need a minimum of $15,000 because with $15,000, that will get you maybe three positions, five positions, and that will give you time to learn because we have to remember at that equity level, we are only really beginning. We are just doing this to learn. In terms of vehicles, you can get started in the share market for much less than you can
Yes.
in your own business or in perhaps even property. There's almost no comparison with property, is there, these days? So it is a great place to start, but just know that you've probably got a little bit of a further trip to travel. You do need to invest in your own education at whatever level you're going for, but definitely to get your head around it, I don't mind the idea of starting with a smaller amount. I do want, though, and this is the key, I want people to begin with the end in mind.
Mm.
If you want trading to be just as good as your business so that you can have two incomes coming in, you are going to have to treat this seriously. You can't just half-ass this. It has to be as serious as a business decision in your primary business would be. There's no way around that.
Yeah, makes perfect sense. And this is, I guess, a lot of the issue. I think people think that they can just do this kind of half-assed, so to speak, and just allocate some money in a couple of minutes and then set and forget it. So let's set some expectations around time. I'd love to unpack with your system, what does a typical day look like? And how much time would people need to set aside to do it properly and to do it justice?
Yes. And that is something because I know that a lot of people listening are going to be strapped for time. Once you get into this, though, it just is so exciting and you won't be able to get enough of it. I guarantee it. So, with the time that it usually takes, if you're trading something which I would consider to be a viable option for really everybody, which is a medium term system. So, rather than looking at day trading, which I don't do because the stats are not on our side with day
Mm.
trading, rather than looking at even short-term trades, which do take a while, I would suggest most people should start with a medium view. Now, that's holding for maybe 6 months. It's a bit fuzzy around how to define it, but let's call it that. So, with that, you'd be looking at after you've looked at your own education, because that has to be taken separately,
Mhm.
you could do this on half an hour a week. This is something that does not take a long time. And definitely, once you get started, you'll find ways to simplify things. You know, when you started in business, how everything seems like a major drama, whereas now you can do it when you're going to work and you can just talk on the phone and just get so many things done because you have it on the tip of your tongue. The markets are the same. Investigate how to do this, set yourself up professionally from the very beginning, and then do this consistently. That is the key too.
Beautiful. I think that makes a lot of sense. And look, I actually wrote a post about this today.
Ah,
People who use the idea of not having time, either something is not important enough or you do not have the motivation to want to change, right? And wealth requires time. It doesn't matter if it's building wealth through your business, if it's building wealth through property, if it's building wealth through the share market. It's also why I'm not crash hot on the idea of passive income. I think there's leveraged income. Nothing is truly passive, particularly if you want to nurture it. But who can't find 30 minutes a week if it's that important, right? It's one of those things.
and especially when you look at people's television and phone watching times. So they've just finished a study in the States, and I don't even know how these kids managed to do it, but they did it where they actually timed how long each child was on their phone for or online other than for homework. And it was 9 hours a day. Nine
Oh
hours a day
gosh.
for kids. Now they have duplicated that from their parents. So
Mm.
I'm guessing we've got 4 or 5 hours up our sleeve if we can just free up from stepping away from the computer when it's not required for our primary line of business, put it into our own mind. Oh my gosh, the world is your oyster.
Yes, I agree. I agree. And I think it's one of these things. If this is a skill, and if you learn this skill, whether it be like anything else, it's an income producing skill that can serve you for the foreseeable future. And I think particularly we work with a lot of trade businesses. There is only so long that you're going to be able to have your body allow you to continue to do your trade. And either you've got to transition into being a leader and owner of your business, or you need to learn sedentary skills that are going to allow you to take your intelligence and turn that into profits. And I think this is definitely one to consider. Now, Louise, I know you've just written a book about the psychology of money and trading. Is there anybody who really shouldn't be trading? That it's just a big red cross. Don't even think about it. Don't do it. What are your thoughts?
Yes. Do you know, I always used to answer, everybody can trade, but then fast forward a couple of decades, and I've found there are some people that just should not. The type of person who is scattered in their thinking, that can't
Mm,
stick to a plan, that won't actually be answerable to themselves or others. If people aren't looking after the smaller amounts of money, so that as that money grows, they'll look after those bigger amounts of money, that's the type of person that shouldn't trade. Now, I've got to say, I've trained so many people to trade. It has shocked me how many people have been willing to gather the skills so that they can actually make money out of the
mm.
markets. I've trained a variety of people with disabilities, severe disabilities, some people with brain injuries, and working together, we've been able to find ways around their weaknesses. What's even more important, though, I think, is that you harness your strengths. So, as a business owner, you will already be used to using your brain in some way to create money out of thin air. You have already developed the skills you need to convert into trading and to do this well. So, I think don't disregard the things that you've already gathered, because they are the things that will probably suit you as a trader.
Makes a lot of sense. I think that's great advice. And look, I think there's very few people that are in that kind of no-go bucket. If you find that you've got those kind of those propensities, then it's just a matter of coming to face with them and then learning and working through them and creating new habits and behaviors, right? You just need to be willing and prepared to make those changes. So I think that's sage advice. So Louise, if we're going to wrap this up, if you had to give you kind of top 2 or 3 tips to somebody who's considering learning the art of being able to trade the market, what would your top tips be?
The first tip is to get yourself a trading plan. Now, without a trading plan, you will not be able to do anything else in the markets, because everything will be like you're doing it for the first time and you're not really sure of what that actually created for you in terms of, was it luck? Was it good judgment? I don't know. So, first step, trading plan is important. And as I mentioned, from my website, you can pick up that for free. Now, the second step is to start putting a small amount of money into the markets. So the people that do very, very well have a little bit of a risk-taking edge where they go, yeah, I'm going to give it a go. I'm not just going to learn about it for 10 years. I'm actually going to do this. And number three is to find a mentor. And Jackson, look, I'm loving what you're doing with your people that are following you. Your reputation is sterling. The fact that you've taken so many people under your wing and you've been able to guide them and help them see that bigger picture, it is just a joy. So I do the same for my traders. I've been running a trading game mentor program for the last 24 years, which I can't get over. So it's a repeat for free course. And when you're ready, that would be the next step for you. So reading books, getting yourself educated, having a little bit of a stab at it. And when you're ready, get yourself a mentor.
Fantastic. And if people want to find out more about the program and potentially working with you in a high capacity, what's the best place for them to find out more?
Send me an email. Say that we met through Jackson. Gosh, Jackson, friends of yours are friends of mine. So my website again is tradinggame.com.au. And of course, I've got a podcast as well, which is talkingtrading.com.au. Jackson, I'm so excited that you're on my podcast also. So for all of my people, they're going to absolutely love you. And I do think good people tend to introduce me to good people. So, for
Yes.
everybody listening, this is within your realms to do exceptionally well, not only in your own business by listening to Jackson, but also in the stock market. And if I can help you along the way, I would just love that.
I really appreciate that, mate. And this has been a great conversation. I'm glad that we've been able to share some wisdom. And guys, just remember, a good idea is exactly that, just a good idea until you put it into practice. You need to take action to profit from these ideas. So if this sounds like something you'd like to find out more, all of the details will be in the show notes. This has been another episode of the Financial Freedom Secrets Show. Louise, appreciate you making the time and looking forward to getting on your show so we can reciprocate.
I've loved it, Jackson. Great stuff.
Catch you soon.